So this is another refresher. In this refresher, we'll go over volume times, like what times the market is going to be volume, because sometimes, like London session, it kind of like ranges, and then you go into pre-New York ranges, then New York open, there's some volume in New York open. So if the market presents itself, if the charts, like when we do the simulations, and if the charts present a setup like that, we will discuss that as we go on. We're also going to talk about how to take impulse trades. Now, I'm going to go over in more detail next weekend over impulse trades, how to give your trade a second chance and stuff like that. So if those situations arise during the simulation, we're going to cover that as well. We're also going to go over how to take impulse entries and how to actually anticipate trades. Now, anticipating trades goes hand in hand with when you're trying to look at a chart and you're like trying to anticipate where the next candle is going to go. So we're going to go over that as well. First things first, let me just, I know some people know this as well, but we're going to go over timings. Now, times when there's volume in the market. Times when there's volume. So the number one time, right? So when the market opens, there's a lot of volume in the Asian session, right? So when we go to the Asian session, let me just go over here. We're going to do this. Asian session, right? So Asian normally starts at 7 p.m. and sometimes you can see some sort of like a volume move in Asian between 6:30 p.m. Eastern till I would say 9 p.m. Eastern. So during these times, there's some sort of volume in the market because you have to understand, right? When the Asian session is opening, this is only one session. Asian, like you could argue that there's also Australian too, but like Asian and Australian, it's a small session. You have a small window of opportunity when you can catch a trade, which moves with high volume. So that's between 6:30 p.m. Eastern till 9 p.m. Eastern. So sometimes you're going to see some sort of consolidation till 7:30. You might see some moves at 7:30, or you might see a move at 8 or 8:30. So it depends. There's not a for sure time, but you could say that okay, there's always a volume in Asian at this specific time. It's not like that. You have to sit and watch, and you have to really see. Sometimes you come to charts on Monday at Asian, there's volume. Then Tuesday, Wednesday, there's no volume. Price just ranges. Then Thursday, Friday, there's a lot of volume. Like Friday, when I talk about Friday, that's the Friday for the Asian Open. Next, you go into your London. You have your pre-London. Pre-London is around, I would say, starts at 1 a.m. Eastern till 3 a.m. Eastern. 3 a.m. Eastern is when the actual London session opens. That's what 3 a.m. Eastern is. And then you have the London Open. London Open is at 3 a.m. Eastern, and I've seen some volume pushes to 4 a.m. Eastern. Most people here trade London session as well. They trade it more than me. I normally never trade London. So these are the times when I have seen in the chart there's some sort of volume at 3 a.m. Eastern to 4 a.m. Eastern. And then you have the 4-hour candle. The 4-hour candle closes at 5 a.m. Eastern. So you're basically looking at these times. Looking at, okay, these are the times when there's going to be volume in the market, and these are the times when you should be showing up to the charts. After this, you have the pre-New York. Pre-New York, I would say, starts at 5:30 a.m. Eastern and goes till 8 a.m. Eastern, right? So normally I come to the charts at around 6:30 a.m. Eastern. So there is still some sort of volume, but sometimes what happens is price is just ranging. So when price is ranging during pre and Y, then you start to look at that. Okay, I mean, if price is ranging at pre and Y, when's the next time there's going to be volume in the market, right? So you start to look at the time. You're like, okay, perfect. So there's 8 a.m. Eastern coming soon. 8 a.m. is when there's the New York Open. So maybe at New York Open, there's going to be some sort of a volume, right? So New York Open, and it goes till I would say 10, goes to 10 a.m. Eastern, and then at 10:30 to 11, you have the London close. I stopped trading till that time because I understand that okay, if this is going to be volume between 5:30 and 8 a.m., then I'm going to try to catch that volume push. Or if I miss it and there's going to be volume between 8 a.m. and 10 a.m., then I'm going to start to catch the push at maybe between 8 and 9:30. So when you're looking at the charts, when you're looking at the times you should be trading, you're looking at, okay, what time when there's going to be a lot of volume, and then you're showing up at that time. It's kind of like saying that, okay, some swing traders say that, okay, we're gonna take it slow in the summertime because the volume dies down. Why is that? Because people are on vacations, everyone's gone away. There are less people working in institutions, in the banks. There's less micromanaging happening with the algo, so there's less volume. So then they wait for, when people come back from the vacations, September, August, September, October, then there's a lot of volume in the market. Same thing goes over here. Like after 10 a.m., 10:30, 11 a.m., after 11 a.m., the volume starts to die down, because London is closed, New York is going in lunchtime, and after lunchtime, things start to get a little slower, so there's less volume. So when there's less volume in the market, price will either make clean moves, but very, very slowly, because you're looking at the 30-minute, 1 hour time frame, and you're obviously waiting for that long. Or what's going to happen is that you might see consolidation happening during those times, right? So you have to keep in mind what time you're coming at the market. Like yesterday, some people were trying to trade at 1 a.m. or 2 a.m. And I was like, why? There's no volume. You had the whole day when markets were rocking and rolling, and now you're coming at the end of the day trying to catch something. It doesn't make any sense. I used to do that, but then I had to change my ways. So what we're going to do is I'm going to take some suggestions on which pair to actually do a simulation here. GJ, we have GJ. Gold, GJ, bro. Well, we can't do both at the same time. Let's do gold. Oh, GA. Oh, Ugandan. Yeah, okay. Yeah, let's just go with GJ. US 30, I don't trade US 30, so I can't possibly do it on US 30. I don't trade US 30. So we're going to go with, let's go with gold. Yeah, let's go with gold. We're going to stop sharing here, and we're going to share the screen one over here. We're going to go to data center, and we're going to go to gold. This is gold. And we're going to update the news here first. And then we're going to update. Okay, perfect. It's been updated. So now what we're going to do is we're going to go to our browser here. And we'll pick up a random date. Okay, so let's go to let's go to the thing with gold is it changes its scenarios with different things that's happening in the markets. That's the thing with gold. Start with July. Go to February 2020. Actually, we'll go to January or December 2019. Okay, so we're going to choose Sundays, only Sundays, because that's when the market opens. So we're going to go to the New York Open at that time. It's going to give you us 5 dates. And okay, perfect. Let's get these dates over here. Oh, we got September, November, May. Let's do May. May is my birthday month. So let's do May. 12th May 2019. Perfect. Let's do that. 12th May 2019. Bring it down. New simulation. And gold. May 2019. We're going to start with, let's start with 5,000. Is that realistic, 5,000? Yeah, let's do 5,000. Actually, let's do 3,000. 3,000 was my first nice withdrawal I did. So let's do that. New York close, 500. Spread, let's keep it fixed spread. 10, actually, let's keep it real. 100, let's do 100. Or actually, let's do 200, 200 days. So this basically means that, so since I only have data till like, 2018, so this means now from this date, it's going to show me 200 daily candles to the back. That way we're going to have much more detail of what's happening in the past, so that's what this basically means. So we're going to start the simulation. We're going to close all these over here, close this, we're going to close this, and we're going to close this. And we're going to close this. This is open. We're going to close this as well. Now we're going to bring up the charts. We're going to start with the weekly. Then we're going to go to the daily. Four-hour, 1 hour, 30-minute, and 15-minute. That's it. Do we need 5 minutes? I don't think so. I don't think we need 5 minutes. No, we don't need 5 minutes. All right. This is 1 hour and 4 hour, daily, weekly. Perfect. So from here, we're going to choose our naked templates. Naked 4 hour also, we're going to choose our naked templates. 1 hour also, we're going to choose our naked templates. And 30-minute naked template. If someone doesn't know how to do these template things, it's really easy. So let's say you have a template looking like, God, okay, something like this, right? You come to charts, looking at something like this. So what you're going to do is you're going to maybe like delete indicator over here, delete indicator, delete. Oh, and I used to trade like this back in the day. Then delete this, and then we're gonna delete this over here. We're going to delete this over here, delete indicator. We're going to delete this one over here as well, delete. And then we're going to make the chart the way we want it, like this. Grid is going to be no grid. Hit OK. This is we go. And then you go to templates. You go to save template. And then let's say we name it naked 2. Right? And now we go to template. And then let's say we have a chart like looking like this, right? So then we're like, okay, we want our templates. We're going to go to templates. We're going to do naked 2, and there we go. We have our template right over here. Perfect. So let's go to the pre-New York, the time when I'm waking up in the morning. So let's go to the hour, and let's go to the next one. Oh, one more thing. Okay, so 1 sec here. Let me see. So it's 3, 4, 5, 6. Perfect. So when you're looking at the simulation chart here, what basically happens is that you're looking at. Let me just bring this up over here. So when the time is going to be 00, right? This is going to be 5 p.m. Eastern. Sorry about the drawing over there. This is going to be 5 p.m. Eastern, right? When you're looking at, let's say, when it's 1000 hours, when it's 100 hours right over here, then this is London Open. This is 3 a.m. Eastern. This is London. This is 3 a.m. Eastern, right? When you're looking at 1300 hours, or when you're looking at, let's say, 1500 hours, right? When the time there says 1500, this is NY Open. Okay. Yeah. This is NY Open. This is a little bit of a little bit of information here. Perfect. Got this out of the way. Okay. So Now, let's go back to the charts over here. So we're looking at the daily here. Now, just by looking at the daily, we see that daily is kind of like ranging. It seems like, so first of all, what you need to do is you need to look at what the current candle is doing, right? The current candle is bearish. So when a candle is bearish, it's bearish from a resistance. So we're like, okay, maybe this is some sort of a resistance here, which now when we like, kind of like extend it to the left, it makes sense that, okay, because this was support and now it's at resistance here. So when a chart has resistance, it needs to have some sort of a support, right? But here we don't have any support. So we're like, okay, perfect. There's no support here. Awesome. So, I mean, there is, but it's way too down over here. So let me draw support over here. Maybe down over here, right? But it hasn't reached it yet. The point where candle is right now, it's very unclear. So what we're going to do is we're going to go to the 4-hour chart and we're going to see if we can find some more information. So we're going to copy this over here, object, clone it to the 4-hour. Now when we go to the 4-hour, you see that now this zone, this is what most people do, right? So now this zone, this was drawn on the daily chart, but now it's overlapping the 4-hour chart, right? So what we want to do now is we're going to neaten this zone up. So we're going to kind of delete this and we're going to neaten this zone up, probably right over here, right? Or even up over here, right? Yeah, this makes sense here because now, this was the point where the 4-hour candle started to go down. So if it starts to go back up, we have this clean move. So now there's a very, very high chance price can go back up again. And this is 42 pips, 42 pips here. So now at the same time, it seems like 4-hour is tapping into some liquidity area. Now, when you talk about liquidity areas are where price comes down and leaves wicks. Make sense? When price leaves wicks. So when you're looking at the chart over here, maybe this is some sort of a liquidity area because price came down, it tapped into it, and this 4-hour candle came down to this price, like 1282. Wow, we were at 1282 back then. And it tapped into it, it rejected it. The next 4-hour came down, tapped into it, it rejected it. This 4-hour is started yet. It's only been, if you look at the time at the bottom, it says 1200 hours, right? So it started 1 hour ago and it's still open. So we don't know whether it's going to reject it or it's going to continue moving down because the previous candles were bearish. But when we look left, we're like, okay, this might be some sort of a liquidity area because previously 4-hour candles came over here and they rejected it. So right now we have no bias. Just by looking at the weekly though, I'm just going to quickly look at the weekly here. Just by looking at the weekly, it does seem like we tapped into a resistance, but it also weekly is creating higher lows and higher highs. Like the previous candle made a higher low and a higher high. So there's a chance that this weekly candle can flip bullish because the previous one was bullish, right? So this is the higher time frame bias that's just in the back of our mind. Okay. So 4 hours like this. Now we go to the 1-hour chart. When we go to the 1-hour chart, we see the same zone is over here. So what we're going to do is we're probably going to kind of like delete this zone and maybe draw another one and neaten it up. So basically our next zone is going to be right over here. So if price moves up, it's coming up to here. And it also seems like that the 1-hour chart, currently what's happening is currently the previous candle closed doji. It broke the low, broke the high of the previous candle. So right now we're not sure what's going to do. So we're going to probably say that, okay, maybe this is some sort of support here on the 1-hour chart. Perfect. So bias wise, if candles, they do start moving, I would say that based on the weekly, since previous weekly was bullish, daily, not really sure, it's still at resistance. 4-hour might be tapping into a liquidity zone. 1-hour also seems like it's tapping this big old support area, so it could move bullish, right? But if it moves bullish, I would say a better buy is going to be above 1284, 1284.37, because that's the time when this candle here closed with no wick to the top and just dropped. So if price starts to move above here, we have a better chance to catch all these pips going all the way up to 1287. So what do? We wait. We wait. And what we're going to do is now when we look at the times over here, let's go to the 30-minute chart here. Looking at the 30-minute chart, what's going on is that we have found some sort of a support on the 30-minute. Now you see the candles are ranging. So when you look at the time, now look, from this was London Open right over here, right? London Open has been ranging. It's all been ranging. London Open has just been a range. There hasn't been any volume push. So if a volume is going to come in the market, it's probably going to be in like pre-New York or like New York Open, because that's the time when there's going to be some sort of volume in the market, right? So we wait for that. We wait for volume. And the way we know there's going to be volume in the market, when candles just start closing bullish, when they're like bullish candle closes. So if you look at the spread, this spread at 28 points, which means it's 2.7 pips. So currently, we're waiting. The 30-minute candle is about to close, so we're waiting for some sort of confirmation. If someone has any bias here, if someone thinks differently, just, like type it out. Because right now we're just waiting. I think a buy stop is going to be good at like 1284. 30-minute candle closed. The previous 30-minute candle closed bullish. Now, this is not a buy because now this 30-minute candle closed bullish. So someone say, okay, you know what? Now this 30-minute candle should continue moving up. But the thing is, the 1-hour candle is still open. The 1-hour candle is about to close in 20 minutes, right? So the 30-minute is at this little tiny resistance here, right? So it needs to break. And once it breaks, you have 7 pips. You have 7 pips up till here. So this is not a good range, And I mean, if you could expect that the New York Open volume could push gold up, then we got to wait till that point. Because right now, what we're doing is we're anticipating a move up. Well, I'm anticipating a move up. If someone has an opposite idea, just let me know. Looking at the 4-hour, looking at the 1-hour, I am anticipating a move up. So for me, a move is going to be once price breaks this, or once price goes above 1284.50. Actually, you know what? Now, when we're looking at the candle here, if price breaks above this area, this is going to be a hard break because this is a 1-hour candle as well, So when you go to the 1-hour, let's go to the 1-hour here for a little bit. So let me just move this arrow. So this is a 1-hour candle which closed with no wick at the top. The previous 1-hour candle was bullish. It meant price would continue going up, but the next one didn't even go up and it went down. So this means there was a hard rejection. So when the next 1-hour candle starts to continue going up, and once it breaks this area, I'm anticipating that it's going to continue moving bullish because there's a clean candle here to the left. If price drops, then we'll have a good sell below this area right over here. So if my bias is hard buys, I'm probably going to put a buy stop up over here, like 1284, this area here, which is what, like 10 pips away? Pending order, 10 pips. 10 pips away. Percentage risk would be, let's do like, 3%. Stop loss, let's do a stop loss of 10. Buy stop. Oh, that doesn't look good. There you go. Perfect. Move it up a little bit. Awesome. Right. So the 30-minute candle is about to close in 10 minutes. Let's see how this closes. So overall market recent trend is bearish. Wouldn't this be a counter trend trade? Yes, this would be a counter. So if we're looking at the daily, it's not bearish, right? This is the thing. Now, when you look at this whole idea that, okay, this was a high, lower high, perfect. I mean, this is bearish. When you're looking at the smaller time frames right over here, this is just consolidation right now. But when you look at the overall weekly does look like it's bearish, but you're looking at what's happening currently. currently, especially on the 4-hour, we might be making like, you know, these lower lows, lower highs, but at the same time, we're also making these highs right over here too. I don't necessarily look at the trend lines, because when you're looking at the trend lines, you're kind of like confusing yourself. Okay, we have a bearish bias, and then at the same time, we have this bullish bias over here, and now trend lines are like this. So this is, in my view, this confuses me a lot. You know, this confuses me a lot. So I don't go by that. I go by what's happening currently in the market. Where can we potentially go? You know, because think about this, right? When let me see your 1 hour chart. Okay, yeah, so this is your 1 hour chart. So when you're looking at where price is currently, and you're seeing that, okay, so now we all know that price is either going to go up or it's going to go down, right? There's no other way price is going to go. So when price starts to go down, price needs to break this support level here, which is at 1282, right? If price breaks this support level, we will continue moving down till this wick fill, which is going to be at 1280, and this is almost like 20 pips away. Makes sense? So now we have a target if price starts to move down, right over here. This is our target if price breaks this support. Now, if price breaks up, we have a target up to 1287. That's it. That's all what we're looking at. We're looking at where will price go if price breaks support, and where will price go if price breaks up this, like, you know, 1284. That's it. We have our two targets, and whatever the way the candles start printing, if they start printing bullish, there's a very, very high chance price will continue to go up. But if candles start printing bearish, there's a very, very high chance price will continue to go down. That's it. So see, the 30-minute candle rejected that area, so we're still waiting here. 30-minute candle is about to close in like 2 minutes. So the 30-minute candle closed bearish. Now, if we try to take a sell going all the way down here to support, this is the problem here, right? So now this range, this is not a big enough range. This is a 13 pip range, right? This is a 13 pip range. So if someone says that, okay, since the previous 30-minute candle closed bearish at resistance, right? And it also broke the low of the previous one, then this current 30-minute candle should wick up and continue moving down. Perfect. But if it starts to move down, candles start looking left. They look left and they see, oh, there's the support over here. So let's measure how far that support is, right? That support is 7 pips away. It's not enough, you know, that's 7 pips away. So you would want to see a break of the support. Let's zoom out a little bit. Perfect. So now we have some more information. Let's draw our support zone right over here, right over here. So we would want a break of this support for price to continue moving down, which is a 20 pip range, so you could catch some pips out of it. You know, so currently price is just in a range. This is a very solid range, like the previous 1 hour candle. So when you're looking at candle volumes, you're looking at, now when you look at the 1 hour candles, you see that this candle, now this candle had a lot of volume, right? Bearish candle, a lot of volume. This candle bullish had a lot of volume, you know, lots of volume. Then you had the candle that closed small, less volume, right? Then you had another candle that closed small, no volume at all. You had the next candle that closed small, no volume. Now there's no volume in the market. So when there's no volume in the market and you're looking at the time, so now there's 1 hour left for New York Open. So maybe at New York Open, there's going to be volume, right? I mean, if there's no volume right now, when's the next candle volume time? It's at New York Open. So we wait. We wait for a candle to print in the way we want, and then, you know, we try to anticipate where the next candle is going to go, and that candle is basically going to be our trade. So, you know, this is still moving. We go through the 30-minute and zoom in. This is being recorded, right? Yeah, it's being recorded. So yeah, now the 30-minute candle is about to close, and you see, oh, it's breaking up. That's awesome. But we have to wait for it to close. we have to wait for it to close. The thing is, some people, they might take, now let's go previous bar. Okay? So when candle, it's starting to move up. Let's say when it's live market environment and we have this happening right over here. People are going to be prone to take buys. They'll say, oh man, I'm going to take buys over here without realizing the fact that there's a resistance right over here. And this candle is still open. There's 10 minutes left. There's 10 minutes left. So we don't know whether it's going to close bearish or it's going to close bullish, those are your 20 pips push then drop. Yeah, I mean, gold can just drop as well, so let's see how this candle goes. This candle is about to close very soon. And in 3, 2, 1, there you go. 30-minute candle closed bearish. There's still not enough range. This is still consolidating right now. This is your consolidation box. This right here. This is your consolidation. We need to break below here to go down over here. And we need to break above here to go up way over there. So you have an easier target. This is going to be a very, very easy trade over here. And this is going to be the very, very easy trade right over here. My mentor used to say that, hey, well, still alive, he still says that you need to put yourself in the best position to win. And these top two areas, these are your best positions to win. These are the trades you need to take, not in consolidation right now, man. Like, price is just consolidating. So we gotta wait. We gotta wait, amigo. We got a lot of waiting to do over here. This candle is about to come to a close. So see, now it's going bullish, right? Which is good. It's going to close very, very soon. If you look at the 1 hour candle is also closing bullish, right? So now you start anticipating, right? Now what's everyone thinking right over here? Like, where can price go? What's the probability of price going up rather than going down? Is up more or down more? Right now we're using some thinking patterns here. Yeah, it's right. So price moving up is way higher now than going down, because you all see it. There was no volume. Candle volumes were low. So now you start anticipating that, okay, New York Open is about to open in like 2 minutes, right? So maybe there's a higher chance for price to continue going up. So if you look at the 30-minute is also rejecting the area. We look at the 4 hour over here, and can't you just expect the next 4 hour this 4 hour to continue going bullish, right? So when you start to do this, you start to say that, okay, if price is going to go up, maybe I can start having a position, like, before the candle closes, because there's like 2 minutes left. So maybe I want to enter a position. So let's say we're going to enter with 12 pip stop. Oh no, this is way too much. Oh, the spread is 3 pips. Let's modify. Yeah, bring it down over here. Okay. Right? See, so now candle is coming down. Now this candle is coming down, and we are anticipating that price is going to go up, right? We're anticipating price is going to go up. So we're anticipating that New York Open should break above this resistance, right? So now these are hard trades. These are complicated. These are like you'll get into the fact that, okay, these are much more like, it takes a little bit of more experience to take these trades. So now when you're looking at the price, now you're anticipating price to respect the low of the previous candle. So what people do is they put stops right at the bottom of the candle. That's not the right way to put the stop. The right way to put the stops is you have to put them a couple pips below the candle, because you never know, the price might continue lower than expected. So this is going to be 8. So we're going to do here 9 over here. Oh, it's not actually doing those things here. It's putting it right over here. Perfect. There we go. This is actually 12 pips. It's not that bad on gold. Oh, one position got stopped out over there. Perfect. So now this is trying to move up. See, now it's trying to move up over here, right? So now when you go to our 30 minute, it actually came down to wick. If you check the news, there's no news over here. The 1 hour is trying to flip bullish, which is good. Oh shit, it's moving. Okay, perfect. So now, since it's broken that high, now price has a higher chance to continue going up to 1287, which is going to be that's a 30 pip range. So as price starts to go in profits right over here, so it's going into profits. We're probably going to secure half right over here. Man, this is moving pretty fast. I didn't know it's going to move that fast. So we're going to secure this 0.75 close, put stops at break even. And over here as well, we're going to close, like maybe we're going to close 0.25 and put stops at break even here. And that's it. That's a trade. 4 hours going up. So now we know this is the destination right over here. And when we look at the weekly, oh, it looks like weekly was creating a lower wick over there. Daily is also pushing up. So now this is a very strong resistance zone here for the daily. So daily, if daily breaks this, man, we're continuing going up. But the other thing was we anticipated price moving up based on the previous 1 hour close. Price did wick down. There's no rhyme or reason why it wicked down because it's gold. We had one position got stopped out. So gold wicked down lower than anticipated, but eventually it did start to go up. So when you see when gold broke this resistance here, it just continued moving. Because when you have high volatility pairs like GJ and gold, like most times they don't stop. Wow, still going. So when we look at the 4 hour as it's starting to break above over here, when we start to look at the 4 hour, there's a very now you start looking left. You start looking left, you start to see that okay, maybe this is an area where it might have some issues right over here. So when you're like, okay, maybe this is an area where it might start having some issues, you go to your trades and you start, wow, 53 pips. Maybe close this one over here, and then that's it. So you go to the 1 hour, 1 hour still open, 30 minutes still open. So yeah, maybe we want to, trail our stop loss maybe down over here into 10 pips profit. And that's it. So now we go to the 4 hour chart, and on the 4 hour, now we start looking left, right? We start looking left to see that, okay, where can price go? So one area of resistance is right over here. We look left, and the next one could be right over here, because that was the last time 4 hour candles made wicks, right? So when we go to the chart over here, and then we're like, okay, maybe this is an area where the 4 hour can continue up to 1295. And then we start looking at, okay, maybe if it starts going up, it might come up to right over here, 1298, 1299. Since price is moving bullish, you start looking left and you start seeing, okay, where price will go. You make it so simple. Oh, no, man, we broke it all down. We actually broke it all down. This is actually moving really hard. Wow, what's going on over here? I'm going to close this position right over here. What is going on? God damn. So let's copy these zones here to the 1 hour. And let's see how they look like on the 1 hour. Oh yeah, it makes sense. There was a resistance here, and now it's coming up to the next liquidity area right over here. So yeah, sometimes, sometimes things like these happen. This happened. Wow, this is still running. So this was the trade for New York session. So we're going to move to the next New York session over here. Oh, it reached up over there, man. It's crazy. Wow, huge rejection. Oh, went even higher. That is just insane. Okay, let's go to the next New York session. So this is actually recorded. This will be on. I'll place it on the drive so you can rewatch the trade broken down completely. Let's go to the next one. So this is 1000 hours. So 10. So now when you're forwarding candles, you're looking at how these 1 hour candles are respecting the zones. You're looking at how they're being created. So this is a 3 a.m. Eastern, London Open 3, 4, 5, 6. So now we are at 6 a.m. Eastern. So when we come to 6 a.m. Eastern, what we're looking at that, okay, maybe price is kind of like, trying to range, but most importantly, we're going to go to the weekly. So weekly did actually go bullish, I mean, what a nice trade here. This would have been a nice swing trade for a $20 move. This is a $20 move on the weekly. Awesome. So let's go to the daily. The previous daily candle was bullish. This current daily candle is kind of like bearish. So there's a chance that this candle can continue going up over here, right? It can continue going up over here. So when we see what's the range here, this is a 100 pip range. So if we're looking for buys, since the bias is buys right now, looking at current market structure, we need to look at if we can find some sort of a support, right? If we're looking for buys, we need to see if we can find some sort of a support to say that price is going to continue to go up. So when we look at the 4 hour, and now when we have some more information on the 4 hour, it seems like that this was resistance, which might become support, right? But when you're looking to see that, okay, this might become support, it's not necessary that price is going to continue down till 1295 to respect this as support. It means that maybe price is going to create a support right over here at 1297, or to continue to go up. So what we're going to do is maybe we're going to adjust our zone and bring it up over here, because now this was the resistance created, which now when we look left, it matches up with a support back from, whatever date it is, April, 10th April, whatever. So now we have these two zones. We have a resistance zone and we have a support zone, because now we're looking at the current price action. We're looking at what price is doing right now. So right now it's ranging. I'll go to the 1 hour. So 1 hour, now you have this big ass zone here, which is going over the candles. We have to neaten this up, right? We have to neaten this up. So we're going to remove this, remove it. We're going to zoom in a little bit more so we can see the candles. So now what we see is that maybe, price is making a support here on the 1 hour, right? There's a support over here, and there's a resistance right over here on the 1 hour. Perfect. So this is a mini resistance. We're not going to take this into account, but we're going to take this into account because now this is a very viable range. It's a 26 pip range. And once we break above this resistance, we have another range around right over here, 1300, right? So this is 26 pip range, right? So now we have to wait. Now, I guess instead of waiting, price did actually close bullish here, right? Did actually close bullish, creating support in an uptrend. So maybe if we put a stop below this candle, like 13 pips, we could probably anticipate price to go up because, we're in an uptrend. Can that be the case? I think that can be the case. It's a little bit risky, but we're going based off of, what we see. We're in an uptrend, price is creating a support. So there's a high chance for price to go up. So now when we go to the 30-minute chart, let's copy these areas we have drawn, clone it, go to 30-minute. Perfect. Let's go back to 1 hour. So we're anticipating this 1 hour candle to make a liquidity wick and continue to go up. That's what we're kind of anticipating. 30-minute candle is about to close. 30-minute candle just closed. So if I look at the 30-minute candle, the 30-minute candle closed bearish, right? So now there's a high chance price can continue down. So what I'm going to do is I'm probably going to close 50% of my position over here, close it. Because if it hits my stop, I don't want it to hit my complete stop. I want it to hit 50% of what I had risked originally, you know? So now for the 1 hour to go bullish, we're expecting the 30-minute to go bullish, which it doesn't seem like it is. So what we're going to do is, so now the 1 hour candle just closed, it closed bearish, right? So now when we were anticipating the 1 hour candle, let me just move this and do this. Right. So when we were anticipating the 1 hour candle to go bullish, it didn't go bullish. It closed bearish. So now it's in the range. So now what we're going to do is I'm just going to close my positions here. Close it. That's it. Because now price is ranging. We need confirmations. Now, if price breaks support, it's going to continue moving down, right? Down to this area right over here. But it needs to break support. So see, this candle is breaking support. When we go to the 30-minute, it's actually breaking it, but it needs to close below it. It needs to break and close below it to tell us that, okay, now price is going to continue moving down. There we go. The 30-minute candle has closed bearish. This does seem like we might continue moving down because the 15-minute is closed right over here. 15 minutes just closed right over here. But you know what the problem is? The problem is I already took a trade here 30 minutes ago. I already took a trade here 30 minutes ago. So this would be a counter trend trade if you try to take a sell. You know, the stop is going to be like 15 pips. It's going to be too big. The 15-minute candle closed bullish with no bottom wick. So I would want to wait here for another 15-minute candle to kind of like print bearish so that I know for sure that, like, you know, now a mini resistance has been created and we're going to continue moving down. That's what I want to see. I want a 15-minute bearish candle printing it. Oh shit, it's going back up over here. See now, there's 15 minutes left for the 1 hour candle to close. And since this 1 hour candle is still open, there's no reason to look for sells or buys because we don't know how the 1 hour candle is going to close. So we have to wait for the 1 hour candle to close. Because, you know, it just makes sense. I mean, the 1 hour candle is still open, right? And the 30-minute candle just rejected our area there too. So yeah, I mean, there's nothing much happening here. 1 hour candle is about to close right now, right? So now this candle closed with no wick on the top, right? And this is 8 a.m. There hasn't been much volume here, right? So when there hasn't been much volume, you're like, man, like, you know, like we ranged from like what? We ranged from all the way till like, you know, till like Asian session to London Open range, New York, pre-New York range. This is New York Open now. Now, this kind of looks like the trade from the previous trade we took, like down over here, right? But this candle closed with the wick. This candle here has no wick on the top, which means there's no bullish pressure. So we got to wait for this candle to close now. Like if this closes above, you know, let's say like 1299.45, then there's a chance that we could take a trade going up to, you know, 1301. It just gets very tricky. Yeah, it's just ranging. There's no clear direction right now. There's supposed to be volume here, but there's, I guess, no volume. Like, what's it trying to do? Look at the 15-minute. Going up, going down. I mean, it's just confused. Now it's going back up. What can you do? Nothing, nothing. 30-minute candle is about to close in 3, 2, 1. there's a 30-minute candle close. The previous 30-minute candle closed a doji, right? So now I'm not going to take a trade, but I'm going to anticipate the next candle to continue going up. But I'm not going to take the trade because, you know, it's a doji, there's a resistance here, there's a high chance it might go up because the overall trend is bullish. Looking at the daily, I don't know what it's trying to do. But looking at the 4 hour, 4 hour still open. Buy stops at here. Let's have buy stops at like 1300 or yeah, 13, yeah, right over here, which is what, 10 pips away? It's in 10 pips, buy stops. Man, the spread is so big over here. Right over here. Stop is going to be, wow, that's a huge stop. So we'll see. We'll see when the buy stop gets activated. I don't like this either because if it goes up, it's like an 18 pip range here. Wow, nothing. Candle's about to close in 3, 2, and 1. There we go. Candle closed, right? We look at the 1 hour here. 1 hour closed like this. 1 hour closed with a small wick. It's still at resistance. It's still very wishy-washy. You know, like there's not, the 4 hour also closed. The 4 hour closed bullish with no wick on the top, but it kind of means that, okay, there's a chance that 4 hour can continue going up. But when we look on the smaller time frames, when we look at the 30 minute is still closing at resistance. You know, I mean, it's still potentially can go up, but I don't know. It's just not so. Let's just say I don't want to take a risk. It's not so nice. Wow, look at this. Yeah, look at this 15-minute. Small body, big wick down. Small bodies means less volume, right? So this 30-minute, I mean, closed very weak. Now this 30-minute has broken the low of the previous one. We don't know what's going on. I mean, if this is some sort of a fake out, it could potentially moving down, but we'll have to wait and see. Yeah, it's just very hard. Like the previous trade was very easy. See, the 30-minute candle closed bearish, rejecting resistance. It could continue moving down, but we'll have to wait and see. See, now if it's going to go down, it has to respect the high of the previous 30-minute candle, which actually, you know what? If we think about it logically, and if we don't think about the overall trend is bullish, if we just use logic dictates that there was resistance here, resistance. This candle tried coming up, closed doji. This candle came up, closed with no, like, less wick, which indicating like less bullish range. This 30-minute candle closed with no wick on the top, which means even way less bullish range. So if price is going to break with NYC open, it could break down rather than breaking up because now the candles are closing bearish. You know, yeah, with a big down wick to fill. That's what I'm thinking. But I'm not going to execute on this trade. I'm just anticipating it. I'm just anticipating that, okay, it could go down. Actually, you know what? We're going to take like a small position. Let's take like a 1%. Yeah, 1% small position just to see. This would be like my 1 or 2 lots that I take on trades, like a small risk. So this candle's about to close in like 10 minutes over here. In 3, 2, 1, and close. Right, we close over here. Let's check the news. There's no news. There's some FOMC member later on. Looking at the 1 hour. 1 hour also closed bearish. So Yeah, perfect. Makes sense. Now it's also 10 a.m. here. So since it's 10 a.m., what you want to do is you might want to put stops at break even right over here. That's it. Stops are at break even. If something happens, it happens. If it doesn't happen, whatever, we waited. It just ranged. It just ranged the whole time. We took one buy over here. It didn't really work out. This is a 1% trade running. Oh, nice. It's running. Oh, beautiful. We got like 10, 11 pips. This candle's about to come to a close. Probably close this right over here, and yeah, that's it. So this session wasn't easy at all. It was pretty hard. It was pretty hard. It wasn't easy at all. So let's go to the next one. Oh wow, it came down. Okay, this is London Open. London 3, 4, 5, 6. 6 a.m. Eastern. This is our 6 a.m. Eastern. So what we're going to do now is that we will kind of go to our daily, or actually, first of all, what we're going to do is we're going to remove all these zones. Yeah, we want to remove all these zones from here because, we got to redraw all our zones here, right? Let's go to the weekly. Weekly is still bullish. Okay, daily. Oh, daily candle is trying to come up over here, but the daily is still ranging, right? Daily is ranging here. Now, when you look at this daily range, this is a 64 pip range, 65 pip range, 69, sorry. Now we go to the 4 hour. 4 hour is not looking good because, 4 hour is just dirty. 4 hour looks pretty dirty. 4 hour is approaching some sort of resistance up over here. So we're going to go down to this 1 hour time frame, and we're going to see what information we can find in the 1 hour time frame. So when we go to the 1 hour, 1 hour seems like there was a resistance here, which could be support. Make sense? Right? So now this is a good market structure, man. Now you could expect, now if this trend is bullish, right? So price created a resistance here, and no, yeah, resistance here. So now here price created a high which matches up to this previous high. So there's a high chance that price can continue down, create some sort of support, and then continue going up to retest this high. So that's the trade I would want to look for. Does that make sense? Because if this was resistance, it has to create support and then continue going up. So let's just copy this to the 30-minute time frame. Oh, we got a lot of zones there in the 30-minute time frame. Perfect, right? So the best thing to do would be to look for some sort of a support formed on the 30-minute time frame, and that will give us indication to take a buy all the way up to retest this high, which is like 15 pip range. So we could easily get like 10, 12 pips out of it. Yeah, that'd be a good trade. This candle is about to close in 3, 2, 1. Candle closed. 1 hour candle is still open. Here's the 1 hour candle, it's still open. The 30-minute candle closed like a doji. So we're still waiting. We're still waiting for the 1 hour candle to close. So I know someone wants to take a buy right now, but it's very important. You need to wait. You need to wait for this candle to close, the 1 hour candle. 30-minute candle is closing in 3, 2, 1. Perfect. It closed bearish, right? It closed bearish. Now, the thing is, what we're looking for is that maybe, now you see how these candles, they came down? This candle came down over here, rejected it. This came down here, rejected it, right? So New York Open is about to come later on. So if we get a support forming here in the 30-minute chart, we could possibly take a buy. Or now when we look at the 1 hour is still bearish, whatever. But the 30-minute here is interesting, right? Now we could do two things. This is kind of like the first trade we took earlier on. So let's zoom in a little bit into the candles. Let it form. Oh, maybe a buy stop. Yes, exactly. Whoever drew that line, I like it. So we got some retail sales coming on. They're expecting bad numbers. Oh, they're expecting bad numbers. So when they're expecting bad numbers, this means price can continue going bullish when they're expecting bad numbers. So yeah, buy stop here. Whoever drew this line, this is exactly what I was thinking, a buy stop right over here. Because if this candle closed with no wick on the top, and if price starts to break above it, it's going to continue moving up. Because, it's gold, and we could possibly see a move up back to 1300. So yeah, I think that would make sense. So pending order around, let's do a buy stop right over there. Perfect. Oh, it got activated. Buy stop got activated. Yeah, I mean, this candle is now still open, the 30-minute candle. Man. Oh, wow, this candle closed. Hard bearish, coming down to a stop. Oh, stopped out. Got stopped out. Thank you, whoever drew that line over there. Okay, so now we're trying to move up over here. I'm just trying to see if the 4 hour is going to continue. Because if we look on the 4 hour, if we look on the 4 hour, this was, because this is a big deal here on the 4 hour, right? These two 4 hour candles, they created resistance. These two candles created resistance. This 4 hour candle closed bullish above resistance. So can't we just visualize this current 4 hour to flip bullish? Do we agree on that? Now we're just kind of like visualizing where this 4 hour candle is going to go. We're just visualizing that, okay, maybe this 4 hour candle could go bullish because the overall trend is bullish, even though there's some sort of a resistance here. Now you have to understand these resistances, these minor resistances, they're broken when there's volume in the market. So now when we're looking at the time, right? When we're looking at the time, there's 15 minutes left for the New York Open. So maybe that's the time when there's going to be volume in the market. Does that make sense? That's the time when there's going to be volume in the market. And if now, let's say, for example, if price is making like, on the 30-minute chart here, or let's say, 30-minute chart is making like these lower lows and lower highs, what's going to be the point where price is going to go bullish? If this candle breaks the high of the previous candle, then there's a higher chance price might start making higher highs and higher lows. Because we're looking at candle trends. If some of you guys are here and you've seen Prep 2020, we talk about candle trends in that webinar. So that's what might start to happen. So maybe, I think that buy stop got triggered too early. Maybe we can have another buy stop over there. It's only like 6 pips away. It's no big deal. Or maybe a market execution. Oh, it's coming up over here. Oh, really? So the 4 hour is continuing to go bullish. Let's look at the 4 hour. Yeah, 4 hour is going to continue going bullish over here. 1 hour is also going bullish here. It has actually tested that high right over there. So if there's a chance it can continue going up, I think we have missed that chance. Oh, we've missed it. Oh, wow, man. Yeah, I missed it. That was the trade. Yeah, I think our buy stop got activated way too early. It got activated too early. If we would have put it back again, we could have caught this move. So where was the best entry? There was no best entry. There was the buy stop that we were talking about because there was no confirmation for a good entry. It's just, it had to be like a market execution right over here. Could have been a market execution with like, wider stop, like 15, 16 pip stop. So because price gave no entry at all, could have had a buy stop that we talked about. Yeah, so now we've missed the entry. Now there's no trade. I mean, yeah, there's no trade. Let's see how this candle closes here. This is the news. I mean, we're kind of like rejecting that area now. Oh, wow, look at that. Move down and move back up. Yeah, we missed it. We missed the trade. All right, let's go to the next. So Wednesday, we missed the trade. It happens, sometimes. So this is London Open, right? This is London Open. You check the time, 1000 hours, London Open, 10, 3, 4, 5, 6 a.m. Eastern. We are back at, oh no, this is 6 a.m. Eastern now, right? We're back at 6 a.m. Eastern. So we're going to go to our daily charts, and we're going to look at our daily charts, and we're going to see what's happening on our day-to-day analysis here. Ooh, wow, look at that, man. Daily candle is creating. What's the trend here? What's the trend? Someone tell me what's the trend over here. No? Nobody? Okay. Bullish, yeah, bullish. So for price to go bullish, we need some sort of a support forming right over here, right? I hope we all can agree on that for price to go bullish, we need some sort of a support forming here, and we need this high to be retested. But that's what we think, right? That's what we think should happen. But what we see is happening is that we made a high, then we made a low. The next daily candle created a lower high. It made a lower low, but there was no volume because look, the candle closed weak bearish, right? So now this daily candle, it made a lower high. Currently, it made a lower high. Now it's bearish. Now on the daily, there's no confirmation to take a buy, right? Do we all agree on that? That there's no confirmation on the daily to take a buy? Yes, we agree on that fact. Okay. Now we go to the small time frames. We go to the 4-hour time frame. Now, when we're looking at the 4-hour time frame, now we're going to neaten up these zones here. This is a pile of garbage here. A lot of zones drawn over here. So we're going to remove all this. Remove this one. Right over here. Remove this one. So, now Wednesday, we had no volume. If you look on the 1 hour, there was no volume. So maybe this is Thursday. There's going to be some volume here on Thursday because Thursday is fucking juicy days, man. Okay. So now we're looking at the 4-hour, right? So when we're looking at a 4-hour, what we see is that, so now when you're trading or when you're looking at the charts, you're looking at what you see, not what you think. What you see is happening. So what we see is happening is that 4-hour is creating a resistance here, right? We're creating a resistance here. And when this current candle broke the low of the previous one, and it also made a lower high. So it made a lower low and a lower high. The candle before that, it made a high over here and it made a low down over here, but it closed below this area, like let's say 1296.50. The candle before that was bullish, but it also closed below this area. The candle before that was bearish, and it also closed below the area. So now this is a resistance, right? We have this resistance now. So when we remove all these zones over here, remove, and when we kind of like zoom out a little bit, if price starts to go up, this is going to be the next area where it can come up to. So now, do we all also agree that a better buy would be above, 1296 to go all the way up to like this 1298 and then 1299? Do we agree on that? That's going to be a better place to take a buy? Perfect, because we have all that range here. Okay, awesome, perfect. So we're going to copy these zones here on the 1 hour time frame. But if price starts to go down, right? If So now when we're looking at the charts, we're looking at what will happen if price is going to go up and what will happen if price is going to go down, right? So when price is going to go up, we're going to maybe start to look at taking buys above here to go up to all the way over there. But if price starts to go down, maybe price is going to come down till, first stop is going to be over here, right? And then next stop is probably going to be over here, right over here, right? So now this is what, 20 pips away, and below this, it's like 40 pips away. Perfect. So now we're going to go to our smaller time frame, the 1 hour time frame, see what's going on. So when we go to the 1 hour time frame, now 1 hour time frame is messy, man. This is so messy. I don't even know what to do with this 1 hour time frame. Let's go to 30-minute time frame and let's zoom out here a little bit. Yeah, 30-minute it just looks bearish. The 1 hour just looks bearish. And 1 hour does not look bullish at all. It seems like maybe maybe this was some sort of a fake out right over here, this move up, because price came up and the next candle just rejected that area and came down, and it's kind of like ranging too. But we look into the details. It's kind of like, we're also maybe making some sort of a support, tapping into a support. But the candle here, this candle closed below this area, short with stops above the 1 hour. Yeah, Lars, I was kind of looking at the same thing. This is a 17 pip range for a 20 pip move down. I mean, yeah, it could move down, but I mean, the stop is going to be too big. It's going to be way too big of a stop loss. So kind of want to, let's go to the 30-minute here. 30-minute, I think. Oh, let's remove this zone here because, this is too fat. We want clean zones. So now when we're looking at the 30-minute, the 30-minute is also creating lows. It's creating bearish candles. And when price is moving bearish, this is the thing about wick fills, when price is moving bearish and it has wicks to the left, like this wick right over here, this wick over here, this wick over here, there's a high chance that price will continue down to fill these wicks. And then eventually maybe, also start to go down right over here. So when we're looking at the 1 hour chart, now looking at the 1 hour chart, so now if we're looking for sells, if we're looking for sells because the candles are bearish, right? The candles are bearish. There's no confirmation to take a buy yet, right? There's no confirmation to take a buy. And if candles are bearish, there's a high chance price can continue to go down. If we look at the 1 hour, as Lars said, this is going to be a 17 pip stop. It's pretty big. So when you go to 30-minute, even though this 30-minute candle closed with a small body, it's still very bearish. There are still wicks here to fill. So if we want to make a smaller stop, we look at a 30-minute, and if the 30-minute is going to make a lower, higher, lower, low, this is going to be like a 7 pip stop, right? Let's go to let's do 8. So this, I'm going to anticipate, even if we lose, we're not losing. Oh, stop loss too close to current market price. No, it's not, man. Come on. Okay, 80. Right? Even if we lose like, like 8, 9 pips. We lose like 8, 9 pips. And then if support is formed, then we can take a buy going up to way all the way over there. But for now, what we see is that price is closing below, these supports. This was bearish. This was bearish. This closed bearish. There's these wicks to be filled. Now, when we look at the higher time frame, the 1 hour, on the 1 hour, it just looks very bearish. There's no confirmation for buys. 4 hours is also bearish, right? So 4 hours also bearish. So now when we start to anticipate the 4 hour, it does seem like that if the 4 hour is respecting this resistance here, it just makes sense for 4 hour to continue down to next support. That's the whole anticipation here. That makes sense for the 4 hour to continue down to next support. So let's see what happens over here. This candle's coming down. It's coming down to fill the wick. Oh, it filled that wick over there. Probably put stops at break even now. Yeah, stops are at break even, you know, because this was a risky entry. So put stops at break even ASAP. The 30-minute candle just closed. It closed bearish. Oh, it gapped down too. Is there any news? There is some news there, US news, unemployment claims. Oh, we got stopped out. Yeah, see now we're at support. 4-hour candle is coming down. I think 4-hour candle is coming down. I think daily is also coming down. I don't think there's going to be any buys. Kevin, what do you think? I think this is coming down here. The daily, the weekly is also. I think it's rejecting this whole area. The daily is coming down. Yeah, I think it's counter trend pullback. 4-hour wick fill. 4 hours coming down. This is coming. 30 minutes coming down. I think it's all. I think it's just gonna come raining down. So if it's gonna come raining down, I think a better thing to do would be to maybe have I don't know, maybe take another entry or wait for a pullback. Yeah, I think we're going to wait for a pullback over here. There we go. Now we're forming some sort of support. We need some sort of a pullback here. See, price is now pulling up. So when price is pulling up over here, and if we're anticipating for the 4-hour to continue moving down, and now this is where it gets tricky, right? This is where you start to look at that, okay, you know what, if trend is down. So what happens when trend is down, right? Price is going to make a low. It's going to come up, make a lower high, make a lower low, lower high, lower low, lower high, lower low, right? So when that's translated into candles, candles are going to form like this. They'll make lower highs and lower lows. So now when you have this candle going bearish, then you have the next one going bearish, and when you have this candle, so now you're anticipating this current candle to respect the high of the previous candle, right? So this means that you don't want this candle to break the high of the previous candle, which means now you want this candle to create a wick here and then continue moving down. So maybe if we want to enter our trades now, maybe this could be a nice trade. Maybe have a stop above the previous candle, which is going to be let's put it at 90 pips and go with our usual risk of let's say 2% and take a sell, and anticipate that since on the 4-hour where we will continue to move down, maybe this is a pullback. Oh yeah, this is a pullback to make a lower high and lower low. There we go. Kind of close like this. We go to 30-minute. 30-minute is still open. This is the New York Open now, right? This is the New York Open. If you look on the 30-minute, this 30-minute candle, it closed below these two candles, right? And now if volume is coming in with the New York Open, the volume can push 4-hour further down because now it's just heading down. If you look on the daily can also head further down to 1292. So maybe here now we can take another entry having a stop above over here, which is going to be let's put it at 11 pips right there, right? And bring this stop right down over here, right? Because now we're looking at just candles, this candle 30-minute close below the low of the previous one. So now we can just anticipate this to continue moving bearish. So if it starts to move bearish, oh, what? We got stopped out. Wow. We got stopped out over here. Man, let's have a sell stop down over here. 1293. It's going to be 6 pips away. Kervin, what happened over here? We got stopped out. Sell stop down over here. Because if New York Open is going to push price, it should keep pushing it down. If New York Open is going to push price and it's gold, it should activate this and should continue pushing it down. Oh, there you go. It's open. Oh, wow, it's moving hard. Okay, so close this. Close this. Put stops at break even. Oh, wow, 4 hours now really moving down. I would say this was a pretty hard trade. This wasn't easy. Oh, shit. Now when gold moves hard. Probably close 30%. There, run. Yeah, this is some hard moves. So see now yesterday, Wednesday it just ranged. Now Thursday we have volume. Now it's moving high volume. This is some beautiful drop here on gold. Let's go to next candle. Oh, retracing all the way up. This is now drop again. Yeah, this will drop again. There's a wick here. Let's go to the next candle. Oh shit. Drop more. All right, close this over here. Wow, there's some crazy drop on daily here too. So since price was moving down and we thought it's going to continue up, there was no confirmation for buys. All candles were just bearish. Wow. Okay, let's go to the last day here now. Okay, what happened here? So this is 3 a.m., 3, 4, 5, 6 a.m. Eastern. This is a Friday. We are on a Friday at 6 a.m. Eastern. So what we're going to do is we're going to go to the weekly. Weekly is just bearish. Friday is probably a no trade day. So we're going to remove all these zones here from the daily chart. Remove. Full margin shorts again. Yeah, looks like it. Looks like it just by looking at the daily. It does look like full margin shorts. So what we're going to do now is, since this candle is moving bearish, we're going to see that, okay, where's the next support? So maybe the next support is somewhere over here on the daily time frame, right? But could also be some point. Let's say if we got one support over here, there could be another support right over here at this wick, which is 30 pips away, right? 33 pips away. We're probably gonna clone this to the 4 hour. Let's go to the 4 hour here. Now, oh wow, 4 hour is actually bearish, heavy bearish, right? So what's going on over here on the 4 hour? Probably we're creating some sort of a resistance on the 4 hour. If 4 hour is going bearish, it might come down and fill this wick here, which is like 11 pips away. And then furthermore, it might continue down to fill this area right down over here too. It just looks so nice for sells. Like honestly, there's nothing else I see here. I just see straight sells. Now we go to the 1 hour. 1 hour also, it's just so clean. It just looks like that can continue to fall more. So we have to kind of wait, because like it's kind of closing at this support over here. Yeah, it's closing at this support. So I guess we have to wait a little bit. Yeah, we're gonna, if this is gonna be the last trade, this is gonna be the last trade. So we're gonna try to do full margin over here. We're gonna try to go full margin on this trade. Yeah. Let's clone to the 30-minute. Yeah, we're gonna wait here. We're gonna wait for the 1 hour to close. At support. We have to wait. 1 hour candle about to close. It closing in 3, 2, 1. 1 hour candle closed. 1 hour candle closed bullish, little small volume candle at support, above support. So there's no sells right now, right? It closed above support. If price starts to go up, we will start to look for buys above this area here to go up to this area right over here. That's the trade we're going to look for if price starts to go up. Right? This is a 31 pip range, so that's what we're going to look for right here. If price starts to go down, we're going to start to look for price to continue down. Let's remove this, delete, copy. Let's remove this over here. If price starts to go down, we're looking left, we see, okay, maybe price is going to come down here, this area here, which is going to be, what, 18, 20 pips? And then there's a chance if it's gold, it can probably come down over here too, like 1279, we don't know. So let's see what happens here. We're waiting for sells. New York Open is about to come on in 3, 2, 1, and 0. Perfect. So let's look at the news. We have no news. We have news at 10 a.m. Yeah, I mean, right now, we still don't know. Right now, we're still waiting. Can we use the sell stop here again? Sell stops. Because this might be a crazy idea, but the reason why I'm saying sell stops is because if price is moving up, it's creating support. It's making these higher low and a higher high. It's making a higher low and a higher high. So if it's going to drop, it should break this low and then create a new low and then continue moving down with volume, right? But if it's going to go up, it should respect this low and continue going up with volume. But we're not looking for buys. I'm looking for sells. Because on the daily over here, man, daily is just bearish. Daily is bearish as hell. We rejected 1300. 1300 is a strong psychological level. We're coming down. I mean, this is just consolidating right now. And now it's just belief, right? The previous 4-hour closed below this area, and this 4-hour is probably retracing to continue down. So let's see how it happens. But I'm willing to put a sell stop right down over here, like 8 pips away. It's going to be 8 pips away. Risk, we're going to put on how much risk? We're going to put on 10% risk. 10% risk. Let's do a sell stop. Perfect. Perfecto. We have a 10% risk running here. So if that sell stop gets activated, it's gonna start continuing down, because right now we just have targets, right? If price breaks support, our target is down over here, 1282. That's our target. Oh, it's activated. Sell stop has been activated. Now, here's the thing, right? Now when we're looking at the time, now this is really, really important, okay? This is really, really important. Now this, you really have to understand. This is really, I cannot stress this enough, how important this is, what I'm about to explain to you. When you look at the 30-minute chart, right? So this is the 30-minute candle close, right? When this 30-minute candle closed, this is the close of the first half hour of the hour, right? This 30-minute candle close. So now when you look at the 1-hour chart, yeah, I think that's curve in there. So when you look at the 1-hour chart, now when you're looking at the 1-hour chart, this 1-hour candle, it broke the low of the previous 1-hour candle, but it didn't break the high of the previous 1-hour candle. Does that make sense? Right? So this means that now there's a higher chance for this 1-hour candle to close bearish and the next one to continue down, only because it didn't break the high of the previous one, but it broke the low of the previous 1-hour candle. So when price changes direction, let's say if price is making higher highs and higher lows, for price to go the opposite way, it needs to break the lower high, which was this one over here. It broke the lower high. Now you start anticipating that, okay, since that's done, now there's a high chance for price to continue moving down. So we'll see what happens over here. Hopefully it doesn't embarrasses me. Perfect. We're moving down over here. There's going to be some sort of a, oh, wow, god damn. There'll probably be some sort of a retracement over here. Probably going to wait for the retracement because now this has been broken. And someone would want to say, oh man, I want to wait for like a retest to take a, to take a retest trade. So we're going to wait for that. Oh, there we go. There we go. This is the 4-hour candle open. Oh, man, now this is the new 4-hour candle start. Now, just by looking at this 4-hour candle, do you think the probability of this current 4-hour candle to go bearish is low or is it high? Yeah, there's a high probability. There's a very, very high probability for this 4-hour candle to continue going bearish, right? There's a very high probability. Now, let's say if we didn't have this position open, right? Hypothetically speaking, let's say we didn't have this position open and we're anticipating this 4-hour candle to go bearish because the previous one closed below all these ones here. What do we have to do? We have to wait for some sort of a resistances to be formed, right? Because now we need to know where the stop loss is going to be. Now Yannick said sell when it flips. That's perfect. But we want to know where our stop loss is going to be if we're anticipating the 4-hour to go bearish. So when we look at the 30-minute, now looking at the 30-minute, maybe, if this previous 30-minute candle was the breakout candle, right? Now we're breaking down candle. If this was the breakout candle, and if this is the start of the new 4-hour candle, so maybe we would not want this 30-minute candle to break the high of the previous one and continue going bearish, right? So now, whenever you're taking a trade, you're looking to see where is your stop loss is going to be. Where is your stop loss going to be? So I would say, man, a good stop loss is going to be above this previous 30-minute candle, in the anticipation that the 4-hour candle is going to respect this area and continue moving bearish. So this is going to be 11 pip stop. Same thing over here. We're going to sell it. Now we have 20% risk running. Let's add on a little bit more. Oh, we have no more margin left. Okay, yeah, we're running at full margin right over here. Awesome. See the 30-minute candle, it's still open here. Go to the market, 30-minute candle is still open. Ooh, we're coming down. 15-minute candle is, oh, let me just pause it. Pause it. Go to where price is right now. Remove all these zones, delete, and perfect. So if you look at the 15-minute, the 15-minute now looks awesome to go down. There is no way this can go back up. There is no way. Kervin knows this is full margin, There's no way it can go back up. Let's add a little bit more risk over here since this is the last trade. Yes. Oh, the new 15-minute candle just started. 30-minute is heading down. Come on, let's go. Let's go downtown. Full margin gang over here. 1 hour is also heading down. Oh, we're moving further down. MasterCard. Yeah. Let's look at that trades here. Oh, we at 100% at this full margin trade. This normally never happens. So I don't think this is normal. Wow, this is just amazing. That whole breakdown was intense. Let's look at the 4-hour here. Bearish. Very, very bearish. So we're probably gonna close this, close percentage over here. Maybe like close 3 lots. Stops at BE. Wow, this is insane. This is when gold just keeps on running and blessing. Ridiculous. Just absolutely ridiculous. Let's go to the next chart. Oh, wow. This thing just 100 pips. $10. Man, I caught like 120 pips on Friday on gold sells. It's kind of like this. Flipping accounts on the simulator. Let's see what happens next. Oh, nothing. We ranged. Yeah, it's done. Well, that was it for today. I haven't even had breakfast yet. Yeah, so this is going to be, this was recorded probably like, later on in the day. It's going to be in the drive there, so you could take a look at it. Yeah, so I'm going to head off. Everyone have a safe weekend. Next weekend, what we're going to do is next weekend we're going to do, what's that? Yeah, so we're going to go over like, how to take second entries, like how to actually execute second entries on trades with lowering risk and stuff like that by looking at candles. So that's going to be a whole presentation we're going to go over. So have a good weekend, everyone. Stay safe, and we'll see you Monday. Shukriya, Kervin.